Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go and talk about the income pick for today, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer, and they get delivered to your inbox. Real estate investment trusts, REITs for short, have been taking a hit lately after the Federal Reserve signaled interest rates will need to climb even further and stay high for longer to curb stubborn high inflation. Higher borrowing costs puts pressure on REITs and their profits. However, it must be said that not all REITs are feeling the pinch. Simon Group, Inc., traded on New York Stock Exchange under symbol SPG, recently reported another quarter of its strong results, increased its full-year guidance, and its quarterly dividend. John?
Yeah, thanks, Mo. Simon Property Group is a REIT that buys premier shopping, dining, entertainment, and mixed-use destinations across North America, Europe, and Asia. Now, going back to 1993, its portfolio consisted of 114 properties, primarily in middle-market malls in the Midwest. Today, Simon's diversified portfolio includes over 250 properties in 37 states and 14 countries. Now, like all good REITs, Simon is always looking to expand. In 2022, it completed 14 redevelopment projects across all of its platforms here in the US. It opened 44 anchor specialty tenants in 2022 and expects to open more than 40 more in 2023. Its global properties are anchored by 3,000 plus brand powerhouses, including brands everyone knows like Gucci, Louis Vuitton, Microsoft, Tiffany, Giorgio Armani, Aritzia. Now, in addition to premium retail spaces, the company's growing portfolio includes office spaces, hotel, residential, and partner outlets. Over the last several years, it's actually added over 4,000 hotel and residential units to its portfolio. Now, it also owns an 80% non-controlling interest in the Taubman Realty Group, or TRG, which has an interest in 24 regional, super regional, and outlet malls in the US and 4 mall properties in Asia. On top of that, it also has a 22.4% equity stake in Europe's second largest publicly traded mall operator. And that company owns more than 130 properties in 14 European countries.
John, I touched on this a little bit earlier as well. This company reported strong financial results in the second quarter, and it also increases guidance for 2023. If you could elaborate a little bit what's happening here.
Yeah, now, first, to fully appreciate how well Simon Property is doing, you need to take a look at what it was doing before the pandemic. Now, in 2019, Simon posted industry-leading record results, which included revenue of $5.75 billion, cash flow of $4.04 billion, and funds from operations of $4.39 billion. It also paid $8.30 per share in cash dividends. Then the pandemic hit. Like the rest of the globe, Simon Property suffered. Not a big surprise. Quarantine shoppers couldn't go to the malls and spend their money. Since then, though, the company's revenue, FFO, or funds from operation have come roaring back, and so too is its dividends, share repurchases, and share price. In 2021, the first full year after the pandemic, it reported significant occupancy gains and record retail sales. Full year revenue increased more than $500 million to $5.12 billion. Cash flow increased $1.3 billion to $3.8 billion. And funds from operation climbed $1.2 billion to roughly $5 billion. Now, this allowed the company to increase its quarterly dividend by 27%. It did even better in 2022 with consolidated revenue of $5.3 billion, funds from operations of $4.5 billion, and net operating income of $6.1 billion. The all-important net income was $2.14 billion, or $6.52 per share, and it looks like it's going to do even better in 2023. The company currently expects to report 2023 net income of $6.39 to $6.49 per diluted share, and funds from operations in the range of $11.85 to $11.95 per share. Now, the funds from operation per diluted share range is up from previous guidance range of $11.80 to $11.95 per diluted share, or an increase of 2 cents per share at the midpoint. The company is quickly actually closing in on its pre-pandemic levels. In 2019, it reported net income of $6.81 per share and funds from operation of $12.04 per share.
And now let's talk about dividends. This company increases quarterly distribution again.
Yeah, Simon Property is known for its reliable growing dividend and share buybacks. Since going public in September 1993, Simon Property has paid out roughly $40 billion in dividends. In 2022 alone, it returned $2.8 billion to shareholders. Of that, $2.6 billion was in dividends and $180 million was in share buybacks. In August, the company declared a quarterly dividend of $1.90 per share, That's up 15 cents or 8.6% on an annual basis. That works out to an annual payout of $7.60 per share for a yield of 6.78%. Now, again, as I was saying, it has a solid history of raising its dividend too, 7 times over the last 2 years. It's not always sunshine and roses, of course, not even for cash-rich companies like Simon Property. It was forced to cut its dividend during the pandemic from $2.10 per share in February 2020 to $1.30 per share in June 2020. And it's held it there until June 2021 when it raised it to $1.40 per share. Now, it's been growing steadily since then. And thanks to continued strong results and raised guidance, which includes the ever-important funds from operation, there's every reason to believe that Simon will raise it again over the coming quarters.
Lastly, how about the SPG stock? I was reading that it has a 45% upside potential.
Yeah, like what's better than a reliable growing high yield dividend? Not much, truth be told, but a growing share price certainly helps, and Simon Property has that. Its stock is actually down from its November 2021 high of $148.55 at around $110 per share, but that can be attributed more to investor concerns about inflation and rising interest rates. The long promised recession has not materialized yet either, and it may not. Simon Property stock continues to do well by any metric, up approximately 10% over the last 6 months and 34% year over year. Now, the outlook for Simon Property Group remains extremely bullish, with Wall Street analysts providing a 12-month share price projection of $126.50 per share to $160 per share.
John, thank you so much for analysis. Investors may be bearish on REITs, especially retail REITs, but there's every reason to be optimistic about Simon Property Group Inc. Thanks to its top-tier brands, it's popular with high-income earners and international tourists. This has been helping it report strong financial results in post-pandemic economy. It has #1 balance sheet in the industry. Once again, it raised its full-year guidance and increases high-yield, inflation-crushing quarterly dividend. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.